Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going back into our weekly numbers for week 51. We're 1 week away from a full year, so I'm finally hitting the mark that I've been waiting for. So we're going to go ahead and get into it. This is our Shio portfolio weekly numbers for week 51 as of July 12th, 2025, on Saturday. So let's get to it. So we have our current portfolio net worth. We're at $636.62. We have a market gain of $54.05. And we have a return of positive 16.38%. This is our all-time. So this is 51 weeks worth of performance right here. We have our weekly data for week 51. You see this is as of July 3rd, 2025. You see the curve of the chart here. So about midweek we were coming down, then we kind of came back up. Gold definitely came through on Friday. We have no cash flow this week. We have a market gain of $5.54, and we have no dividends for this week. So that gives us a total gain of $5.54 for this week. And we have a money weighted return of positive 0.88%. So that's for week 51. Then we have our portfolio monthly data for week 51. This is as of June 11th. So we have one deposit here. We see the $30 deposit on June 25th. So you see a spike up on the chart. That's $30 deposit. That's $30 of cash flow. During that time period, we have a market gain of $7.24, as well as dividend earned of 54 cents. So it gives us a total gain of $7.78. And we have a money weighted return of positive 1.26%. So this is our monthly data for week 51. Now we have our quarterly data. So this is 3 months worth of data. You see our curve of the chart right here. So this is as of April 11th, 2025. So the past 3 months. We have $120 of cash flow. So 4 deposits. You have one here, one here, one here, and one here. So every 3 weeks we auto deposit $30. During this time, we have a market gain of $34.01, and we have a dividend earned of $1.03, which gives us a total gain of $35.04. And over that time, we have a money weighted rate of return of positive 6.42%. So this is the quarterly data going back 3 months for week 51. Of course, we have our all-time data. This is the whole picture. This is from the very beginning. You see way back here, as of July 19th, 2024, going all the way back. Like I said, we're 1 week away from getting a full year worth of data. So we have cash flow of $585.65. So you're going to have our initial cash deposit of $100 to seed the account. And then every 3rd week, an auto deposit of $30. So you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Right? So 30 times 16, you get 480 plus the original $100 puts you at 580. We have a market gain over that time period of $50.97. And we have a dividend earned of $3.08, which gives us that total gain of $54.05, which is at the beginning, as well as our total money weighted return of 16.38%. So that's over the entire time period. Pardon me. Now we get at our weekly numbers, or weekly percentages, sorry. On the right, we have our target weighting for our assets. So gold at the top, we still have at 45% with our GLD ETF. USCI, we have at 15% with our commodities ETF. Bonds, we have at 15% with our GOVI ETF. Stocks, we have at 10% with our RSP ETF. US dollar, we have at 10% with our UUP ETF. And Bitcoin, we have a 5% with our IBIT ETF. So these are our current weighting. So gold, still the dominant asset in this portfolio. So this is our currently weekly return. So gold is up 0.65% for a market gain of $1.84, and that's mostly from Friday. I think it was gold was up over 1% on Friday. Commodities up 1.74% for a gain of $1.65. Bonds down 0.85% for a market loss of 80 cents. Stocks down 0.40% for a market loss of 26 cents. US dollar up 0.89% for a market gain of 55 cents. And Bitcoin up 8.05% in a week for a market gain of $2.56. So Bitcoin coming up. Bitcoin also popped on Friday. So early. I got somewhere to be, so I gotta get to this quick. Monthly percentages. So gold up 0.32% for market gain of 88 cents. Commodities up 2.15% for a market gain of $2.01. Bonds up 0.23% for a market gain of 21 pennies. Stocks up 3.43% for a market gain of $2.10. That's a good one for the month for stocks. US dollar down 0.28% for market loss of 17 cents. Bitcoin up 8.87% for market gain of $2.75. So that really wasn't much different from the weekly. So you could tell all of its gains were pretty much from the week, from Friday, really Thursday, Friday. Very recent. Then we have our quarterly data for week 51. We have gold up 3.62% for a market gain of $8.69. We have commodities up 10.57% for a market gain of $8.50. So very good for commodities. Very good. Ooh, too much. Coffee. Bonds up 0.93% for a market gain of 78 cents. Stocks up 14% even for a market gain of $7.98. So stock market's at all-time highs right now. Everything is at all-time highs. Stock market, or S&P 500, NASDAQ, Dow Jones, Bitcoin, I think it's all at all-time high. Gold, it's all at all-time high. Actually, gold's not quite at all-time high, but it's pretty well up there. It's almost there. US dollar down 1% for a market gain of market loss of 61 cents. And Bitcoin up 41.07% for a market gain of $9.70. So really good for the quarter. And here we are all time. So remember, some of these aren't all time that I've held these assets. We have gold up 35.47% for a market gain of $37.97. Commodities up 19.79% for a market gain of $10.28. So both gold and commodities doing great. Bonds down 2.45% for market loss of $1.88. So we've only held this bond position since February of this year. So we don't have 51 weeks worth of data for it yet. So this is a not accurate number. Stocks up 4.41% for market gain of $1.97. So we're back in the green for stocks for all-time data. US dollar down 10.68% for market loss of $5.88. Fucking dollar's horrible. Been horrible. Probably worst year for the dollar in a long fucking time. All post-Trump's election, basically. It's pretty much all been down from there. Bitcoin up 98.56% for market gain of $12.96. Almost 100%. Almost up 100%. I'm almost at one full year. So Bitcoin goes up even a little bit next week. It'll be like 100% in 1 year. Pretty good. My position changes, so nothing as of the end of April. So April 30th, 2025, that was the last time I made a change. So we're already in July. Still haven't made a change yet. I keep saying I'm going to reduce gold, but gold's fighting. Gold is fighting. So no portfolio transactions. So no new anything. So we have our Luvium staking dashboard for week 51. Crypto's also rallied, so we're up. Our price is $12.08 right now. We currently have 21.62 ILV staked, which gives us a current market value of $261.19. We have our Luvium investing for week 51, so in 15 days, it's going to unlock in 15 days, so it's going to be great. And our page 2, our most recent one, unlocks in 356 days, so all these unlock at different times. All right, so it's going to be once a month, every month after this point. Then we have our revenue distribution, so no new revenue distribution. We've had 3 revenue payments, pretty much were all last year, of 0.024 ILV. which has a current market value of 29 cents. So no new revenue distribution and no new transactions. God, I'm so tired. So that's it for our weekly numbers. Now we get into our charts. So as you can see, gold, look at this fucking pop right here. Look at this pop right here. So I'm talking about it popped right up. Zoom in on that. So it's going chopping up and down in the red, and then it kind of came up out of this red trend, and it came down back in the trend, and now popped up again. But as you can see, kind of around this area, it popped up here, then it bounced here, then it bounced here. It almost tried to bounce here and then going up. So it's almost keeping in line with this upper green trend now. So the lower green trend line is kind of acting like support, which is interesting. It's not, it hasn't yet come down into the green trend. It looks like it's popping off right there. So maybe gold still has some room for growth. So we'll see what happens. But going back to October 2023, way back here, just up and to the right. This has been gold, up and to the right. I don't know why people haven't been owning gold. It's crazy to me. All right, so we have our commodities still in this upper trend channel, still out of the lower trend channel. Okay, on a 5-year, see going back to beginning of COVID pandemic right here. Commodities were just in an up cycle for like 5 years now. This top trend kind of came back when commodities were way fucking crazy high, and then they came down. But now they're back up in here over here. So this lower trend hasn't come back to it yet. It has not come back to this lower trend. It's in this upper trend now. So the upper green trend lines. But you see, it came up and out, and it's still trying to come back up again. So commodities still doing good. I don't think inflation's going away. It might be lower compared to when we had that crazy 9% year over year was an inflation number, but commodities are still going up. So in my mind, inflation's not going away, at least not easily, not yet. Our bonds position. Fuck, I hate bonds so much. Keep waiting for this reversal trend to happen. It's never happening. I'm just wasting money on bonds. I feel like when I switch, when I lower my position out of bonds, that's when bonds are gonna fucking rip. I'm gonna fucking lose. But it's still in this lower trend. Still bouncing up and down. Going back to, what is it come down? October 23, same as gold. So it's just been bouncing in this trend, kind of in an upward trend, but on the lower band or the lower line of this trend. So it's been staying low. I really wish it could get back up here to the fucking upper trend. Bonds are bonds. So as long as Fed has control the interest rates, it's fucking around. It's gonna keep messing with it. US dollar. Dude, I keep extending out these lines because there's no discernible trend, right? Well, there's a long-term trend, but there's the short-term trend. So we're still under this red line, still coming down. If we look at the dollar long-term, let's see how long-term. It's been on 5-year. So it's a pretty good trend I've seen. So I'm totally stealing it from whoever I saw it online. I forget who. Just kind of fuck with it a little bit. There we go. So, maybe a little more. Yeah, it's crazy choppiness. Something like that. I feel like if it goes up here, it's too high. It's pretty good. So this is back to 2008. 2008. That was the real estate crash. That was the GFC. So you see, it's been chopping up and down in this range. It's kind of popped out a little bit, came back down. Popped out a little bit, came back down. And I put the blue line in because that's the 100 line. That's like a nice big round number that people like to focus on. You see, as you go further back, it kind of bounces around that 100 line as it goes further back, even before that. But right now we're at this low end of the trend line. So we kind of bounced off it. Look at that, we hit that line perfect. We came down, hit that line, bounced. I don't know if maybe we're at the low end of this fucking over decade-long trend line. Like 15 years, whatever, 16 years. This fucking trend's long. But it's been popping up and down, up and down, up and down, up and down. We're at that low end of it right now, so we're going to see what happens. Stocks, RSP, oops, zoom that in. There we go. So back up in their trend, equal weight. So it's good. Stocks are at all-time highs, like I said, for the main indexes, but we're back in our trend right now. So it's trying to get back up there. If you look at the S&P, let's see. Ooh, gotta extend out that trend. Fuck, I guess I could delete this line. It's pointless. Maybe I'll just add it to the all-time high. Actually, I should have just done that. Horizontal line. 61.28. Call it 61.30. So this was the basically all-time high. This blue line. And it popped up through it. So my guess, it might trickle up a little bit. It might come back down. I think probably hit this. At this point, it's going to be in that green line. It might pop up and go up. We'll see. But like I said, everything's like at all-time high. The fucking gold at like an all-time high. So everything's at all-time high. It's crazy. Just gonna see what happens. Bitcoin. Oh my God, Bitcoin. Look at that fucking candle, man. Look at that fucking candle. It's popping up big time. It's almost at 100% for a 1 year return from it. It's crazy. Now these lines that I drew, or this line singular that I drew, look at it popping up off that line. Look at that shit popping. I guarantee people are like, oh, it broke this generational line. I'm like, well, for right now, yeah. For right now, it has, for sure. But remember, this goes back really far, right? So it doesn't look like it's all that much, because these other ones kind of popped up above it too, right? You see that? It kind of had like they all popped up above the line, but they didn't stay above that line. So we'll see what happens. It's a big ass candle though, for sure. We'll see what happens. As of right now, it is above that line. It's pretty well above that line. It's popped up pretty good. So we're going to see if it can maintain it, or if it comes back down, maybe tests it, breaks through it. We don't know. That'd be nice to see though on my full 1 year return to have Bitcoin at 100%. That means for 52 weeks I've held this at 5%. And obviously if I held it at a higher percent, I would have my money over that time period. But Bitcoin is not, or holding a volatile asset like that is not the point of this portfolio. It's diversification. So Bitcoin is one of 6, right? One of 6 assets. There's gold, commodities, bonds, US currency, stocks, and Bitcoin, right? And Bitcoin is the most volatile, so I have it at the lowest percentage at 5%. So I will never have it at high percent. It's just too volatile, right? But having it in there has definitely helped my portfolio. That little 5% fucking matters, especially when that 5% goes up 100% in a year almost. That's fucking really good. But anyway, that was my update for this week. So I'm very excited for next week because it's going to be 52 weeks, a full fucking year. Full fucking year of data. I've been waiting for that. And going forward, that's the big metric I'm going to be using to judge my portfolio. I want a positive year-over-year performance, of course. Operationally, I want to be within 5 to 10% year-over-year. So 5 to 10%. So every year I show that, or every week I show that 1 year return going forward. I want it to be within that 5 to 10%. Optimally, it'll be above 10% like it is right now, right? Because that's just bonus. Anything above 10%, I don't have a number beyond 10%. I just want that to be above 10% for optimal performance. But operational performance is 5 to 10%. That's what I'm going to stick with. So if it goes down to 9%, I won't be happy year over year, but that's still in the operational performance. If it's below 5%, that's suboptimal performance. That's bad performance. And if it's negative, I'm just like, might as well kill myself. That's crazy. Because this point of this portfolio is to be diversified and protect yourself from crashes and stuff like that, and just slowly grow over time. But anyway, very much looking forward to next week. Super excited. So as always, thank you all for watching. If you have any questions, comments, or criticisms, let me know. Have a good day.